Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Thursday, June 16th, 2011 is brought to you by Realtic. All right, guys, let's get right into the mix today. The markets are a little bit quieter than yesterday, which is not surprising. Remember, after a ginormous move in one way or the other, in this case, yesterday it was down, the markets usually pause. They usually take a little bit of a breather, and that's what we're seeing today. And the markets, again, are just slightly positive, getting a small bounce. Now, the reason why we're not continuing to see massive selling today is because of what's going on in Greece and the speculation on what will happen in the next few days. The analysis right now and the expectations right now look to be that at some point Greece is going to get a secondary aid package of a multi-billion-dollar proportion here. And the reason is they're not going to actually cut like they're expected to. Originally, Germany was firm on it and said, listen, Greece must cut this much before we give them any more money. But the problem is the whole economic system in Europe is near collapse because of Greece. So it's which is the worst of two evils here? Give Greece a few more $1 billion here, or let the whole system possibly collapse, which means Greece goes, then Spain, then Portugal, then Ireland, and who knows who else. So again, that's really what it comes down to. And obviously, as we are seeing here, the markets are reading that and saying, all right, listen, they're going to get a little bit more of a lifeline here, and therefore we can relax a little bit. And the markets are coming off their lows. Now, eventually, this will bubble back up if we don't see a resolution soon and some money going to Greece. But right now, again, the markets are pausing. Having said that, you can see how the levels on the charts continue to work beautifully. You can see the lower level held over here yesterday. Then we've basically been trading up underneath this blue line. The two scalps that I called out on the spiders this morning in the intraday stock chat, which, by the way, there was a 7-day free trial too. If you want to come in, ask questions, hear my analysis, hear my trade calls. But the two questions that I gave, or the two trades that I gave out today, one was this one right here. 50 moving average hit was the first pullback. You got a beautiful pullback, as you can see. And then the next one was the blue line hit right there. And you can see that one was a beautiful pullback. Those have really been the only two good plays of the day in the intraday stock chat on the spiders. There have been many, many other trades on various stocks, whether it's Chevron, Exxon, Apple, Baidu, JP Morgan, Goldman Sachs, Bank of America. I mean, I could go on and on. I know CLF we talked about as a trading opportunity today or two. So there have been plenty of other trades, but just looking strictly at the spiders, you can see it's not as whippy as it was yesterday. Yesterday we had this nice gap down and push up and then reversal to the downside. Today it's much, much quieter. Volume is a lot less, although it is decent volume today as well. All right, now we've talked about what's contributing to this market's small increase today. Right now, the Dow is up 67 points, Nasdaq is up 3, and S&P 500 is up about 4.5. Basically, a third of a percent average across the board. But there are some stocks that I want to talk about today, folks, that are in action. Number one, we are seeing some technology stocks weaker on the day. Apple Computer. Now, this isn't a big down day, but again, considering the markets are slightly positive, you would expect Apple to be positive as well, and that's not the case. Apple is down about 30 cents on the day. Percentage-wise, that's nothing, but again, being a leading stock in the tech sector, Apple not performing like you would expect it. Amazon, same thing. Amazon, AMZN is the symbol on Amazon. The stock is off the lows, but still slightly negative. So that's where the weakness is coming in on the tech side. Nasdaq's only up 2.5 points right now. So again, you can see that little bit of weakness. Another stock that you want to pay attention to after the close today is Research in Motion. Research in Motion today, folks, is reporting earnings after the close. So once the market closes today, pay attention to Research in Motion. You will most likely see a pretty sizable move up or move down. Now, if you go to the daily chart, I want to show you this, guys. We can erase this trend line. You are at major support on the daily chart. And again, whether or not that gives us an inclination as to which way this market will go, or this stock will go on earnings, is up in the air. But look at this master support level. I mean, this is a huge support. This is $35 level right here, 35 to 35 and a quarter, which is actually hit yesterday and today. You can clearly see going back to 2008 and the lows from 2009 on Research in Motion. Now, everyone is bearish on Research in Motion. Everyone hates it at this point in the trading world. People who use Blackberries like them, obviously, but in terms of Wall Street, people are very bearish on the stock. To me, that tells me it has a small chance of a bounce. All right, and again, I'm just going to throw that out there right now. We'll see what happens. I think that expectations are lowered. I saw the whisper number is actually lower than the actual expected number, which means they could come in at the expected number, and you would probably see a bounce in the stock. Also, a lot will have to do with the forward guidance that they give. They have to definitely innovate. They're getting behind the times. iPhones and Droids and everything are taking control. But, they still have a major base here of consumers, and if they do it right, they can be all right. So it's going to be interesting to see here. Now, again, I expect this stock to be up 3 plus dollars tomorrow or down a dollar. I don't expect it to be down more than a dollar, maybe a dollar 50 max, based on where it is. If you look at the chart, I mean, you can see what has happened here. It's from $70 to 35. It's down 50% since really February, which is a huge drop in a small amount of time. So again, it's already factored in a lot of negativeness. The question is, can they come out and just beat earnings and have decent guidance? The stock should probably get a $2 to $3 bounce easily, maybe even a little bit more. We'll watch this after the bell. I think it's going to be a fascinating thing to watch. I'm just speculating with you in this video. All right, let's go on to a couple other charts here. What else is moving today? Hewlett Packard. You have to be impressed with Hewlett Packard. Hewlett Packard came down and kissed a support area yesterday. Look at the size of the bounce here. If we go to the intraday chart, this has been a powerhouse for a market that's really not up that much. Hewlett Packard is having a very nice move. This is a Dow component, so it makes sense that the Dow is leading today percentage-wise, up 65 points, with the Dow being up, half a percent or so. Hewlett Packard's up beautifully over 1% on the day. Actually up over 2% right now. Scanning through, American Express is another standout today. AXP, let's take a look at that intraday chart. It's stalled out here, but this could be looked at as bullish consolidation. AXP is another Dow component, as I said, and therefore, again, American Express being up 85 cents, that's also helping the Dow. So the Dow, again, is up half a percent, while the S&P and the NASDAQ are more on the neutral side to up about a third of a percent on the day. One stock in motion, guys, getting crushed today is Harbin Electric. This is an electric player from China. This is just one more possible fraud, accounting issue, woes type play in China. They continue to see these basically one or two a week, it seems to come out. And again, this stock on speculation is getting absolutely roasted. It is down over 6 points on the day, over 6 points here, guys. And now many of you might say, well, would you buy it as a bounce? And I would say no. Why? Normally, if this was just a normal stock in the U.S., I would say yes. The reason why I wouldn't is because there's a possibility of a halt. If it gets halted and you're in this stock, you will not see any ability to get out of it until it probably opens up on the pink sheets if there is problems in the accounting and the fraud side, and therefore it's going to open up at $1 or $2, and you would get crushed on it. So I know it looks cheap here, and I know it could bounce, but the safety side of what we've seen here. I mean, take a look at stocks like CCME. This is China Media Express. If you go to your daily chart, that's exactly what happened. It was getting crushed here. People thought, oh, okay, well, it's cheap now, I'll buy it. And then it gets halted and opens back up literally a month or two later and goes basically to $1 and change. So, I mean, it was trading in the teens down to $1 and change. Same for CAGC. Same thing. Stock is coming down, gets halted, and then reopens down here. I mean, there's so many of these in China that it's just crazy to think about. It is really crazy. Now, ultimately, what I wrote an article about this today, which I think is fascinating, is that ultimately what you'll see is a lot of these Chinese stocks will be investigated. Any stock that does not come out and looks legitimate, I mean, it comes out clean and looks legitimate, it is at an unbelievably cheap valuation. It will be the buy of the decade, in my opinion. All right, if they get cleared. Essentially, if you see some of these accounting firms really go in and maybe they hire U.S. accounting firms, that's what I would do. If I was a Chinese company, I would make sure you become as transparent as possible and show the investing world that you have nothing to hide, and you'll see your stock price literally go up 100, 200, 300% in a year or two if you can prove it. If you can prove it, that is. And you got to be like that, folks. I mean, it is amazing what's going on here. And Harbin Electric today, yesterday, there was another one halted, CHBT. China Biotics, look at this thing selling off. Many people thought this was nice, but then they come out yesterday and say, "Hey, listen, we're gonna delay our filing of our annual report because of issues in accounting." And again, issues in accounting essentially are code words for we reported contracts we didn't really get, or we reported revenue that we didn't really get. I mean, that's what we're seeing in all these other ones. So it's a fascinating story going on here, but something that we need to continue to watch, obviously, and you have to be aware and you have to trade it carefully. I right now am staying away from Chinese stocks on the swing trade side. Occasionally, I'll pick one up here and there as a a 1 day hold or something. But aside from that, I think you have to be super careful. All right, let's take a look at the financials today. Financials are having a little bit of an update across the board, except for J.P. Morgan. I talked about the bottom in financials, guys. I talked about a bottom in financials last week. We had a huge move up towards the end of last week, and on Monday they pulled back. I love this bottom still. I think to be honest, I think Morgan Stanley's probably a buy here at these levels. And again, I may look to pick it up myself down here at these current levels. All right. I will keep you guys posted on that as well. And again, I possibly will pick that up by the end of the day. But remember, if you want to find out if I'm actually taking a trade, what you need to do is take the 7-day free trial to the Research Center. I post all my trades live there in the Research Center, again, that are swing trades, and you get them in the hot charts and alerts. Everything is included in the Research Center, so you can just go in and go check that out, folks, and get any information you want, all right? So, again, take the 7-day free trial. There's no harm to it. There's no obligation. As long as you cancel before the end of the 7 days, you have no obligation. You won't pay a thing. And again, the amount of trades that you're getting here, you're getting literally a trade or two a day on the swing trade side that are mostly working out. We're talking about 90% success rate, folks. Out of every 10 trades, 9 are going to be profitable. That's our track record. And again, you can always go to the archives. We list our archives on our website at inthemoneystocks.com. If you want to see these trades in the history of it, they're all live. They're all time stamped. You can go in there and just go to inthemoneystocks.com under free services. You'll see the archives, which are our track record of past trades. All right, so I encourage you to do that. I always encourage due diligence, even if it's into us. Go do it, check it out, and you'll find the good results. All right, let me just scan through here, see if there's anything else. Chevron and Exxon are positive. Those are both Dow components. Again, JP Morgan is a Dow component that is down, one of the few financials to be down. CRE is continuing to head towards 35. I have a buy level on CRE not too far off, folks. If you look at your chart, you have not too far off here, but it's about $1. I'd say $1 to $1.50 away for a swing trade buy on CRE. That's getting intriguing to me, possibly one that I will put out as a possible trade in the next week or so, and we'll continue to follow that. Small caps today, you do have some small caps moving, but overall things are a little on the quieter side today, as I mentioned. Today we did get decent economic news on housing, home starts, and permits jumped surprisingly today. Jobless claims fell, which is a good thing as well. On the home starts and such, Home Depot is having a good day. Take a look at Home Depot, up 77 cents. Lowe's, let's take a look at Lowe's, up 62 cents. Great bounce on Lowe's as well. All right, so very nice there to continue to follow up. All right, other than that, I think that's it, folks. Just a reminder, take that free trial to the Research Center. Take it to the Intraday Stock Chat. Check us out. Join us for a week. No stress, no obligation. And again, you'll find a gold mine, in my opinion. Take care, guys.